Officially, good evening. Welcome everyone to the Options Income Launchpad weekly market wrap, where we tie it up, put a bow on it, send it to bed. I don't know, something like that. My name is Scott. I will be your host. Yes, Jennifer, we're glad to have you. Please feel free to ask questions, make comments, and give the presenter compliments as you see fit. Whatever you feel is appropriate, for sure. Yes, let's talk about the housekeeping matters and remind you, firstly, that everything in what we do is for education and illustrative purposes only. We don't give recommendations to buy or sell. We don't give investment advice. We're not brokers. We're not advisors. We are simply humble traders working together to outperform the market. Any decisions made should be done at your own risk. Yada, yada, yada. The rest is there. And let's get into it. Let's make sure everything is updated. Let me reload. Let's start here. Well, the markets have turned back around. The NASDAQ, the S&P, the Dow, the Russell all dipped negative, but came back a little bit. Though they're still well off of their highs. The S&P is up 0.39, Dow 0.15, NASDAQ 0.73, Russell 0.27, gold is flat. The VIX is up a little bit, which I am absolutely okay with. If we have just a minor uptick in the VIX and then it starts to roll over and drop tomorrow, Saturday. There's no market. Market's closed tomorrow, if you didn't know. On Monday, starting to see things stabilize. Yeah, I think it looks good. What do we have going on? The shutdown continues. Trump is now urging the GOP to go nuclear, meaning they don't need 60, they only need 50. I think they're all a little bit concerned about what kind of precedent that sets. Stock recovery loses steam. I don't know what the recovery means. Stock recovery. What does that mean? What recovering from what? The bullishness? I don't think there was really much of a recovery. It's certainly Amazon soared, but the current rally is losing steam. I would agree with that. Verbiage is interesting there. Here's what I think is interesting. We're seeing more of this. Why Fed dissenter wanted to hold rates steady. Fed chorus comes out against latest cut, citing inflation. I think that's it. But that's building on Jerome Powell's, fog of perspective of foggy. It's getting foggy. There's no data coming, but there's certainly apprehension, it would seem, that the Fed is not as dovish as everybody had been thinking that they were. What else? What else do we have? Tariff talk. He floats eliminating tariffs. We'll call it even more than Senate rejection of Trump tariff stirs North American trade debate. So we have tariff and trade issues. Talks on hold with Canada. Trump touts rare earth win in talk showing Z strong hand, etc., etc. So, okay. I think that's about it. The government news has shut down, so all we have is corporate news, earnings type news, and then anything from private institutions. Let's go take a quick peek there at what we had this week. We did not get durable goods. We did get price index, which exceeded expectations, but came in a little bit lighter than the previous. We got consumer confidence, which also exceeded expectations, but came in a little bit lighter than previous. We went from 95.6 to 94.6, but that's not bad when we were thinking it might drop down to 93.2. Pending home sales a little worse than expected and down quite a bit from the previous month. But we did not get trade balance, retail inventories, or wholesale inventories. We did get the Fed rate decision, quarter point. We did have a press conference, and in that press conference, Jerome Powell mentioned it getting a little foggier, but the market still held on. It still did what it was supposed to do. We had our press conference. We had jobless claims did not come out. GDP did not come out. Income spending, PCE, none of that came out. So really a small fraction of the data that we were expecting. Earnings has been pretty strong for the most part, though a bit mixed. I mean, if you look at Meta got beat up pretty hard today or yesterday on their earnings. But Netflix also got beat up pretty hard. But Amazon did quite well. So it's a little bit of back and forth. I mean, a lot of them are still, if you look at Meta, Meta exceeded expectations. Oh, no, they didn't. What was I thinking they did? Was it, maybe it was Netflix. Earnings, they were expecting 606, got 105. Apparently they are spending outrageous sums on their AI and just aren't seeing much for it yet. But yeah, it's a bit interesting in there. The data that we're looking for next week, I do want to look at two things before we just dive into charts. Next week's data. Do I have it? This week, next week. What do we have? A manufacturing report, but we will not get construction spending. We will not get the trade deficit, the factory orders, or the job openings. We will get ADP employment. So on Wednesday, and that baby, all the Fed has to try to work off of. Right? That may be all they have to try to work off of. And so with that, we're definitely going to be paying very close attention to what that data looks like. On Thursday, we will not get jobless claims or productivity. We will get our Fed speak. And on Friday, we won't get non-farm payrolls. So that's going to put the Fed in a very difficult spot. Okay, let's go look at the Fed watch. Let's reload this. And you can see from a week ago, we were at 90 to 95% expectations priced in of getting that second cut. Right? Let me see if I can even find. Oh, yeah, you can see right here. So 1 week ago, 91.7. And then it's dropped to 1 day ago to 72.8. And then from yesterday to today, it is dropping another 10 points, and it's down to 62. I said I think it could end up around 50-50 pretty quickly. And yeah, I mean, not yet, but it's moving there very quickly. And I think that essentially what everybody is realizing is that we are unlikely to get that next cut if we don't start to get some extra data, right? Some extra data. So that's what we're going to be looking for, is do we get that data, and what does that look like? And yeah, I think we're all kind of feeling the same way, which is that we definitely hope that we start getting that data. I mean, that's very, very important stuff for us, is that data. So, okay. What else? Let's get to some charts. That's what we need to do. Get to some charts. Okay. And tell me if you're trading anything or if you've closed it down. Apple looks great. Made the full move that we were expecting. I admittedly only got about 2/3 of it, but I got some of it. Looks great. It's at a higher high. Now what? Now let's see if this thing pulls back. This is a valid opportunity for us. Here's the old high. Kind of an old high. I mean, I would say starting there all the way to there. If it turns, we've got opportunities establishing themselves in there. That's what we'll be looking for. ABBV. We said we liked it quite a bit, other than the fact that it was reporting earnings. Because what happens with earnings? It's a crapshoot. They shot the craps, came up 7, boom, crapped out. Down 4.5%. So now what? Nothing. Nothing for me. And I'm curious what this is going to do. Let's go take a look actually real quickly, a little bit in advance. Let's go to XLV. This is healthcare. Healthcare itself, I think, looks like it's still holding up. In fact, I look at healthcare XLV and I think, you know what? I would maybe consider a trade on healthcare on XLV. If I can't find something else to trade, I would definitely think, maybe that's an opportunity there. All right, let's keep going. Amazon. So what happened here? We said it was in a consolidation, and then it did one of these, and we liked it, and it dropped back, and then earnings. Now this one gapped up. So if you had traded this would have been a phenomenal gap higher. But it's strong, and it's an 800-pound gorilla, right? It's a one of the largest stocks. It's the strongest. It's the biggest in consumer discretionary. Seeing that strength is going to be helpful overall. Let's go look at the consumer discretionaries. And you can see what happened. It's been like this, and it's come down and turned right back up. Right back up. Okay. Where was I? ANET. So if this was one that we didn't put as an alert, but we talked a lot about this on this chop around entry, and then you can see, boom, it made its move, and now what? Now it looks like it's running out of steam. It didn't quite get there. Yeah, I'd be closing, especially because this has earnings. You only have one more day anyways, and so with it rolling over like this, my thought is let's wait and see what happens with earnings. Okay, APH, what do we think? Strong? Good trend? Just made a higher high? And now what? Now we're wondering, is this thing going to pull back and make a higher low? Okay, here's the first of what I think is now in setup mode. This is a nice flag looking pattern developing right here. One more day, still a flag. So if it flags like this on Monday and then it breaks out on Tuesday, I'd be like, yep, giddy up. That's good signal. Now, if it keeps coming down and then it's kind of sits like this for a minute and then turns, that's not a flag. But that is a support level bounce in an uptrending stock. So, yeah, I like the way that this looks. I think it looks strong. Put it on the list. AXP. I mean, some people might make the argument, but I feel like I'm still going to let it go through the weekend. Maybe it pulls back a little further here, and then it starts to turn around. But I like the way this one looks, and I'm certainly looking for a trade on that development. Bank of America still looks pretty good. Citigroup. I wouldn't indicate any of those as being actual signals now. Yeah, I think that they're just kind of starting to show up and say, hey, maybe. You can see that it got stalled at this resistance level. The stochastics has turned down. So if this thing hits like this and then pulls back and then starts to stabilize, it's like, oh, okay, that's still a maybe. As long as that 50 doesn't break, as long as the trend doesn't break, I think we have something interesting. Something interesting on our hands. Now, is anybody in any of these? Do you have trades on? And if so, where? Let's talk about it. Let's talk about what we need to be thinking about as this market starts to pull back a little bit and what's next. You can see Caterpillar, great earnings, new high. Rolling along at resistance, looking for a pullback, but I would definitely trade a pullback. CCJ, we put this trade on here. Went up for a day, paused, and then spiked. I mean, look, if you didn't do it, now you're still able to make a good chunk, but you've given a little back now. When it was up in these highs, you were literally like at 90% plus gains. So you should ask yourself, why didn't I take that gain? Okay. Now what though? Bullish. Yeah, I think this looks pretty good. Looking for a pullback. Why won't you change? Okay, CLS overextended, nothing there. It was a strong move. It had okay earnings. It needs a pullback. COF is been pushing up against resistance. A little bit of a cup and handle type formation. And now I'm wondering if I maybe have something developing for Monday, Tuesday, right? Does it turn or does it give a doji and then a turn? I think there's some potential here from Capital One. I think it's showing some strength. Coinbase had pretty good earnings. Jumped, rallied, only held on to a piece though. Okay. Coinbase, iffy. Cisco. Man, I'll tell you what, Cisco looked like it was going to top out with that first kind of tweezer hold, that red candle, and then it got a white one, and now it's just like, no, we were just joking about. All right. Delta, I don't really see much there. I mean, I see that it's pulled back a little. Seems to be trying to find some support, but overall mostly sideways for Delta. DoorDash, no, down, selling off, not looking good. The diamonds look strong. Minor pullback. Nothing there. DocuSign. I'm like, let's go show this how to be bullish. Go talk about buying some puts near it. Oh. Okay. DocuSign. Ooh, so this red line is holding. It got there. It got to it, but it did not get through it over here. That's starting to create some potential opportunity, I would say. Ford looks good. I like Ford for a setup. I think it just made a new high. It's pulling back. Yeah, this is looking pretty strong. GE, a little bit unstable. Okay, let's keep going. Gold. Gold looks strong. It's hard to know. If you're willing to put it in with a stop loss. There could still be some good profits there. Google, strong. It made a big old move on earnings to a new high. Pulled itself back. Goldman, I'd say flat. I see the consolidation has broken. But right here, I'm not convinced. Is it going to do something? Is this going to show us something down here and give us a chance? Give us a chance to try to catch it. Okay. Hood. Yeah, I got to think that a lot of people, if they had anything left to close some of it yesterday, if you held any, good hold. But you don't have much time next week. It's sitting on top of earnings here pretty soon. So be careful what you do with that. Okay, let's keep going. Howmet. Still bullish after earnings. We got to wait for a pullback there. IBM. It's chopping around, but it's not looking too bad. Intel, strong new high, starting to pull back. Love it. Love it. Definitely looking to see what does this look like from its pullback. But I would say I would say it's a very strong stock. I mean, it's almost doubled. It's on its way to doubling, and it's looking like it's ready to go. Okay. All right. Where are we at? IWM. Actually, for me, this has prospects. A little bit of a triangle pattern here. But my thought is if this thing catches another day, I can get in, put a stop here, and then see if I don't get one of these types of moves. Yeah, that should probably produce at least a 2-to-1 right there. Volatility's come down quite a bit here in the last couple weeks from when it was spiking. Lumentum. Yeah, Lumentum looks good. Looks like it's kind of flagging. The only problem here is earnings are Tuesday after market. You just don't have time. I think it's one more day, then the signal, and then you're on earnings, and then you just kind of got to wait. But hopefully this thing can give us a trade coming out of it. MasterCard is a no for me. In fact, what's interesting is outside of American Express and Capital One, we're like, well, who else? Should we watch one of the big two? Visa, MasterCard? We had Visa. We dropped it. We put MasterCard, and then it's done this. And then it's done this. Meta. Still down pretty big. I mean, it's down 2.25% from yesterday after being down 9%. So it doesn't look good. Okay, Morgan. Morgan looks bullish. It looks good. It's at a new high. It's pulling back. Microsoft, maybe. They stabilized, they ran up, and then pulled back. You can see the volume as it got near the 200-day wasn't even close to being enough to get us through. Could be tomorrow, but not yet. Micron looks good, but needs a pullback. Otherwise, not much for us there. Netflix. Now, when is the... Okay. Let's go 100 days out. Okay, we didn't have to go very far. I wasn't sure when that split was announced for. Melody said, I'd like to get the 10-to-1 split. Now remember, buying the split is an emotional ploy. You don't get extra equity, right? If I have 100 shares, if I have 10 shares at $10 or at $1,087.30, I'll have 100 shares at $108.73. 10 times more shares at 10 times less the price. There's no equity advantage. So why do people like splits? Well, because number one, if it's splitting, it's because it's been at a high price. Now, you'll notice that every time Amazon or Netflix gets above about 1,200, it reverts back. And right now we just broke to the downside. And so when you think about a stock like this one here, make sure that everything is still in place for the trade itself. Meaning, I have a stop, a target, a time frame, and because everybody knows this is coming. You have to own it by a certain date. I would imagine if this is a Monday, which I believe it is. Monday, that's tomorrow, or that's this next Monday. Then we have the 10th, and we have the 17th, and we have the 24th. Huh. 10th is the date of record. The record date. Yeah. I mean, everybody knows it's coming. Everybody knows it's going to go ex-dividend after that at a new price. It's a funny thing. I'll tell you a funny story. I worked at a company. This is many, many, many years ago when I first got into trading education. I had been working as a Series 763 licensed broker. I was working on the trading desk, the options desk at Fidelity. I took a new job at Wells Fargo, trying to help build out and develop their online brokerage business. It wasn't a good fit, and so I left in July of 2003. I know, you're like, what? 2003? It's a long time ago. And I took a job with a company called InvestTools. And InvestTools was an interesting company. We grew explosively for the next 5 years. So think about July of 2003. We're 1 year out of the dot-com collapse. Everybody thought they wanted to trade online, but realized none of us know what we're doing. So there was an explosive time in trading education at that time. But it was funny because when I came on to InvestTools, I helped build a lot of new content there, risk management, trading psychology, and advanced options content. But some of the old content they had, they're like, we have 6, it was just like a workshop type thing, right? And you buy the workshop. And one of the strategies was splits. And they had this whole like anatomy of a split where there's a pre-split rise and then there's a dump and then there's a, and then it tends to regain its price back in a certain period of time. Here's what I'll tell you. That felt outdated in 2003. There used to be like split announcement, like services where they're like, oh, we'll page you. Yeah. Pagers. We'll page you when a split gets announced so you can hurry and act. I don't know that there was ever enough consistency there that was ever a viable strategy. The thing about a split is this. It's persistently high priced and people like trading it, and they're trying to make it psychologically easier to trade. Someone might be like, oh, Netflix is over $1,000. I can't afford to buy that. You're like, what? You can't buy 5 or 10 shares? Just like you maybe would buy 50 or 100 shares of $100 stock? It just doesn't connect that way. And so when stocks start to get expensive and they start to think, oh, let's do a split. At the end of the day, there is a likelihood that it regains. So after the split, I think there's definitely some key momentum times. However, for me, what I would teach when I would teach that strategy, always conduct your own analysis. If it wasn't splitting, would you have a trade on your hands? If yes, trade it. If no, I would say be hesitant, right? If the only reason you're trading it is because of the split, I think you could find yourself in some trouble. All right. Northrop Grumman. Let me get rid of all this extra space I have now. Northrop Grumman is a no for me. I know you might be thinking, hey, it's right down here. Yeah, but it's at a lower low. I think to myself, let's wait and see if we can get one of these. That's all I need. Okay, NVIDIA worked out fantastically, and once again, if you happen to still be in this trade, you should be able to shut it down for like $4.95. I mean, it got max gain if you're in it now. Even if you shut it down after that first big move where it got above 200, you're gonna get $4.50, $4.60. I mean, it was a very, very strong trade, strong signal. Now what? Now I look at this stock and these earnings and I think, I have time. I have time for another trade. Melody said, thanks for the insight. I gained very well on NVIDIA 10-1 a while back. Like I said, they split because they're bullish. Typically, the board of directors finds that trading volumes have slowed down and they're like, we need to reinvigorate this. Oh, let's split it. There's no dilution because you get 10 times what you had for 1/10 of the price. But there is an emotional draw, right? That when someone's like, oh my gosh, I love NVIDIA at 100. I hate it at 1,000, but I love it at 100. Like, it's the same stock, right? It's absolutely the same stock. So interesting. Okay. Yeah, so at the end of the day, and greedy from their board of directors. That's it, right? Yeah, they're like, hey, let's. So, let me see. Palantir, strong. It busted out and made a new high. Now we have earnings coming out on Monday, I believe. Monday after market. So there's that. There is definitely that. Let me see. Okay. QQQ still looks strong. Technology leading the way. We love that. I think that, and even here you can see, are we expecting maybe a small consolidation into next week, followed by the bump? This is following the playbook, a bullish cyclical playbook. So it is looking pretty good. Pretty good. Okay. Roblox smashed on earnings. Nothing there for us. Reddit got chopped around on earnings. We got to see more stability than that for us to like it. Rocket Labs. I would say Rocket Labs still looks like it's okay and could possibly bounce out of this. The problem with Rocket Labs is you have earnings a week from Monday. So depending on how long it takes for this thing to actually, and it is coming out of about a little bit of a hiccup. We had this strong move up. It chopped around in here for a minute. Boom, boom. There's the first signal. Tried, and then it hiccuped. But the hiccup has not broken support. This is still valid. So if it could turn, then the problem is, well, I only have a few days. I don't know. Let's keep our eye on it. Silver. I feel like the metals, and I know Glenn talked about this, and some of you maybe put a trade on. As I said, be careful. Be careful that anywhere in this region or lower, that if it can't get in there and it rolls over, next stop could be back down to like 38. There's a very good chance that this could be giving it back. SoFi looks great. We took a trade on this. I would expect you were able to close it for a profit. If you held late, a good profit. If you were able to get it into this area here, you did okay with this trade. But it turned and then it turned and then did this. So actually we got in back in here. We got in on this day here. It went up and then it pulled back and then up. And every time it did one of these, it gave you a chance to make some money. Never broke support, and I'm looking for more. So what? What happened? Well, we broke out. Now as it's pulling back, it's looking like this. And as long as it stays above the 50, I think that's got viability to it. Okay. SPY, and we'll look at the VIX. You know we will. So we're up a little bit. We actually over 0.5%. We don't have volume. We got one above average volume day, but it was a tie. So we haven't really had much. We've had a little bit of above average volume. if we start to look at, is our market posture going to improve? Not from this. Interestingly, this is still actually leaning towards a 0, even though it's looking more bullish than not. So there you go. What is going to improve? This is going to improve. Not this one. This one. We got up to that line, and I said when it gets to that red line, if it can get there, and I've been saying that since back here. I said, hey, if it gets all the way up, and it kept going, and it's like, maybe, no, and then it looked like it wasn't, and then boom, it got there. So I'm going to raise my long-term score. Let's jump to the VIX. What about the VIX? If this is fear, there's not a lot. There's not a lot of fear coming in right now. We bottomed. We've moved. If this thing sits around like this and then rolls over next week, that is definitely a lower high relative to this one, obviously. And that equals de-escalation. De-escalation. Fear is subsiding. Who's de-escalation? Institutional. If the institutions have de-escalated, meaning they're no longer buying or holding hedges, guess what they're doing? Buying stock. They don't work against themselves. If you see a surge in hedging, you're not going to see a surge in buying at the same time because they're just counterproductive. So right now, when they get rid of their hedges, that opens the door for more buying. There's plenty of opportunity. And that supports what we think could be setting up and developing for going into November and December. Looking for the Santa rally. You guys know I'm looking for it. I'm a Christmas kind of guy. Walmart. So it held, but barely. So I'm definitely less and less bullish on Walmart. You know, back here I was like, maybe. Back here I'm like, I don't know. And now I'm like, okay, it's in consolidation. It needs to do a break, pull back. Then I get my trade, right? That's what we're thinking. So this one could be a little while. Don't force, don't rush. Okay. We'll look at the XLs on Sunday when we do our market posturing. Let's talk about this. Now, Jennifer, I hope you've had a chance to go into the Circle community, watch the welcome video so you can see where everything is. I would highly recommend watching the market forecasting, the market posture video so that you have a good sense of what we do every week to assess the market conditions and have a good idea of how we're going to trade. I would also suggest you download the group resources. If you trade options, download the options log. If you trade stocks, download the stock log. If you trade both, download both. I would say to download the market posture log so that you can start keeping track of your own score. I would say download the trading plan template. That is extremely useful. This is what it looks like. It needs a new logo, clearly. I just am recognizing that. But we do a loop. The trading plan consists of 8 sections. So every 8 weeks, now we just happen to have 8 weeks left in the year. So this week we're working on section 1, personal info, strengths and weaknesses. What do I say? Give me 3 bullets for your top strengths. Give me 3 bullets for your worst weaknesses. So you've outlined that and you've shown a bit of a self-assessment. Give me 1 paragraph for each of these areas: commitment and discipline, mission statement, vision statement. Now, we also have a trading plan sample that you can download and say, hey, you know what? I don't want to have to just make this up as I go. What is this supposed to look like? And you'll be able to see what does a finished trading plan look like so that you can try to model yours, get some ideas on how to phrase it, how to do it. But we don't believe in New Year's resolutions here. We're not like, oh, come to New Year, I'm going to make a resolution to trade better. That's hollow. We say let's make a strong pass at our trading plans for the 2 months prior, November and December, so that when January hits, we execute. It's not a New Year's resolution. It's just simply I have a better plan, a new iteration, a stronger iteration, but I have a better plan that I'm going to execute on. And then as you're executing, what I would recommend for a lot of people, especially now, if you've only got one pass at the trading plan, then I'd take another pass. But there's also times where we basically just isolate which are the worst sections in our plan. Let's just focus on those. It is a little overwhelming, right? That's that 100%. It's like it's a mountain. It's an elephant that you're trying to eat. That's why we like to break it down one section at a time. Take a look at it. Like I said, all I need are 3 bullets, one paragraph. And if you read the outline sample, you'll be like, oh, okay, yeah, I can do this. And even if it's just a sentence on the first pass. The second pass. So the first pass is to define. The second pass is to refine. The third pass is to polish. That's 6 months, 3 passes. You will have a stronger trading plan than you could have ever imagined. You've thought about it. Closing bell. You've thought about everything. You've considered it. You've spent some time. And there's a lot of people working on it with you. So if you pop into trading chat and you ask somebody, or if you come to a Tuesday or Thursday night session, we have a tendency to work on plans at that time. So yes, I want it to feel manageable. I want it to feel like, yeah, I can do this. I can do this. All at once, it's overwhelming. One little bit at a time, much more manageable. So give me that. What I ask for is an hour, 1 hour a week. In minimum of 20-minute increments, 3 days for 20 minutes, 2 days for 30 minutes, 1 day for an hour. Sit down, put some time on it, and you'll be like, you know what? I've got this. That's what I'm looking for. Good week, good couple of weeks. I mean, it's been kind of a weird and funky market, and yet I had 2 spread trades that got very close to max gain. I mean, it's like, wow, this is pretty good way to finish October. I hope it's been the same for you guys. It's been good to have a few alerts that really did well, especially after we had a couple that didn't. That's the market. That's what it looks like. That's what it feels like. And I got to tell you, coming out of the fog into November and December, looks great, feels great. Looking for that fall, early winter rally, the Santa rally. I'm here for it. I hope you guys are too. All right, that's it for me. It's good to see everybody. Be safe tonight. Melody, thank you for a little compliment, and always like that on a Friday. Thank you. It's good to see everybody. Go be safe. Have fun. Throw some candy at some kids. I don't know, something like that. And I will see you guys on Sunday morning. As always, my friends, happy trading.